Is the SpaceX IPO taking the shine out of gold? A lot going on today. Hi, my name is Drew Urasek. I am the founder and managing partner at The Complete Investor, thecompleteinvestor.net. I'm also a board member of Wealth IQ Group and an advisor on Gold IQ, a subsidiary of Wealth IQ. Lot to talk about today. It's getting pretty dicey in the gold and silver market, the physical precious metals market. You can clearly see we've got this really steep decline since the all-time highs. Especially the last couple weeks have been ugly for gold. We have broken through a couple levels I'm going to go through, but I want to put everything in a perspective because I think a lot more is going on behind the scenes. Again, you can check me out at thecompleteinvestor.net. The founder and managing partner there. We help protect people's retirement accounts with real physical precious metals, real gold, real silver. Most people don't know you can actually own real gold, real silver in your retirement account. Why might you want to do that? Because it's not taxed the same as paper assets. Big deal. It's 100% insured with all risk coverage. Big deal. And also, it's not tied to our debt, right? Our government's now nearing $40 trillion in debt. Every time we borrow money, the chance of default goes up, not down. But let's get into gold and the price of gold and what's going on. And is the IPO, right? The SpaceX IPO really hindering gold and taking the shine out of gold and all precious metals, silver included. Well, I talked about this on a webinar, a podcast I was doing, a video podcast 2 weeks ago. So 2 weeks ago, now going on 3 weeks ago, something peculiar happened in the markets. All of a sudden, tons of money came out of the markets in general, and that includes, physical precious metals, and going into short-term treasuries, 1 to 3 month treasuries, and money market accounts, an unusual amount. And that was highlighted in this Wall Street Journal article. Inflation-weary investors pour into short dated bond funds. And kind of behind the scenes, this normally does happen during summer. Hedge fund managers, big money market people out there that run big funds, take money out of the markets, put it on the sidelines, right? Get a nice little interest rate, go into short-term treasuries, and they vacation. So they don't have to worry about all the possible negative things that can happen to their money while they're in the Hamptons, right? So that does normally happen. But then it followed up right after, and you can see this in Reuters. I didn't open up Reuters because there's tons of pop-up ads, probably more than most sites. Another $111 billion went into, again, money markets and short-term treasuries. And so this is getting a little concerning, at least to me and other people in the marketplace. But a few people have been saying it's going to be because this money needs to free up so it can go into the SpaceX IPO, which is going to be the biggest IPO ever, right? Now, what I have found in the past is that when things are overhyped, they tend to fizzle more than, go to the levels that they, anticipate. So I'm going to be waiting for tomorrow. Okay. I'm going to say, hey, tomorrow's, June 12th when the IPO is supposed to happen. Today is June 11th. I'm recording this today. So I'm going to kind of see what happens. But gold, let's get back to gold. And I want to give you some perspective on gold and where I think it might go from here. Yes, it did break down below this $4,300 level. I've done webinars on this and trainings on this. What's happened since the Iran war started happening and kind of building up. Gold's been doing a short-term trade between oil, and you can see this last night, right? Oil went up 3%, gold down 3%, right? So this change back and forth has been happening. It's been accelerating, I think, because, again, a lot of money is being taken out of the market and going into money market accounts and short-term treasuries. So the short-term play is that money's coming out of gold. But let's put it in perspective, okay? Because at the end of the day, gold typically goes up with our debt, right? And we're only just adding to our debt at astronomical levels, faster than we've ever added to our debt. Some are saying that we've already added $2 trillion to our national debt this year, and the year's just now half over. The speculation that we're going to be at 70 to $100 trillion in debt by 2030 is becoming more and more realistic, in my opinion. And if gold, right, goes up with our debt, which you can look at the history of gold, gold typically goes up with our debt. If we more than double our debt, it makes sense that gold will more than double. And a lot of analysts are calling for 10,000 an ounce gold by 2030. So long term, I think gold is obviously, I'm very bullish on gold anyway, right? Because it's a real asset. It's not tied to our debt. It's globally recognized, has its own sovereign value. But let's look at all-time record of gold. Okay. And I'm bringing this up, and I specifically want to bring this up because I've got a lot of clients that have had gold a long time, especially in their retirement accounts. And I remember specifically this time frame. I'm going to circle it here in a second. End of 2016. End of 2016, which is 10 years, right? And I got a little highlighter right here. 2016. Gold was about 1300. And I've got a lot of clients that came in at, 1300 in their retirement accounts. And immediately right after, it went down to about 1100, right? So that's almost a 20% drop, right? Pretty sounds about what's happening right now, right? Nice 20% drop since our highs just a couple months ago. And obviously that's very scary. But in the long term, look what gold's done. Obviously, because again, as our debt increases, we get further and further removed from the real value of assets, and we get further and further removed from the ability to pay back our debt. Every time we borrow money, the chances of default goes up, not down. So long term, and you can look this up, analysts are calling for 70 to $100 trillion in debt by 2030. That's more than double from right now if we hit 100 trillion. Gold, 4,100, right? It could easily be 8 to 10 grand based on that. And you can look up, analysts are calling for 10,000 an ounce gold by 2030. So yes, there is a dip, and I've had clients go through this before 10 years ago, right? So I understand that this short-term play on, oil versus gold, right? As oil goes up, gold comes down, and these short-term trades are making a lot of money for day traders, right? Hedge fund managers, people in the business. But long-term, at the end of the day, we are borrowing more money that is just not sustainable, and we cannot pay it back. Period. End of statement. All right. Now, also something that gives me a little bit of comfort. And again, it is a little nerve-wracking to have gold come down the way it's come down in the last couple weeks, especially. But let's look at GLD. Now, why do I want to look at GLD? Because gold futures is a derivative. One contract controls 100 ounces of gold, just so you know, okay? And that's the regular gold contract, which I used to trade. That's how I got in the market. 2010, working at the Chicago Board of Trade, the number one commodities and futures exchange in the world, learning from the best, trading gold contracts myself personally, okay? I like looking at GLD for kind of a sentiment of real activity in the market. Why? Because one share of GLD is more accurately controlling real gold. Now, just so you know, GLD isn't 100% gold. It trades at 1/10, and it really doesn't even trade at 1/10 of 1 ounce, because if you look at the math, right, it's like, wait, gold's at 4,100. Why is GLD at 397? because they actually have to sell their gold to pay their bills. Like, it's a company. They actually have employees. They pay a commission to money managers that put GLD in people's funds, right? If you have a money manager, a financial advisor, they sell you GLD, they actually make a commission, right, on GLD. So they have to sell some gold to pay that bill. So it never really has 100%, and it actually goes down by like 0.02% every year that it's in existence. But because one share is closer to 1 ounce of gold than a futures contract, and also it's more traded across the board than gold futures, I look at the activity and the actual volume of GLD. And we can see here something very interesting, right? Obviously, going down on high volume shows weakness, right? Going up on high volume shows strength, okay? Well, this current down, and this makes sense, hey, and it was followed by some buying, right? And obviously up on these levels and down, right? High volume, right? Shows weakness. And we get that, right? It's been happening. But this last pull down is almost on no volume. So pullbacks on low volume shows, uncertainty, if you will. So I am a little more comfortable, and this is just my personal opinion, on this last pullback than the prior pullbacks, right? So that gives me some sense of, okay, we might be running out of steam on this pullback. Obviously, I want to see what happens with the IPO tomorrow, right? If it fizzles, right, gold obviously should recover, because I think money will come back into gold because it's not going into SpaceX, or not, at least not in the volume of SpaceX. We probably also have to see what's really going to happen with Iran, because we just started bombing them again, right? We kind of amped up our efforts to retaliate to for their taking out one of our helicopters. So I think that needs to settle down. I think obviously the big money being in the Hamptons right now also will probably mute the movements of gold. But again, long term, let's remember, long term, our debt's going up. That's unstoppable, but it's also unsustainable. The chance of default is not going down. And the value of gold is based on our ability to pay back that debt. If we can't pay back that debt, there are some analysts calling for gold 20,000 an ounce. Now, obviously, that's, in my opinion, not very conservative. And obviously, what's that timeline? But realistically, in my opinion, 10,000 an ounce gold by 2030 makes a lot of sense. So if you believe that as well, and my apologies, I didn't get out of my drawing tool here. If you believe that as well, you can be like my clients in 2016 that got gold in their IRAs, got gold in their possession, right? Right, going from 1,300 to 1,100 in a very short period of time is a little scary, but ultimately, right, the long-term prognosis doesn't look very good for our dollar, doesn't look good for our government's financial fiscal responsibility, if you will. And I personally think that, hey, this is a great time to get into gold, especially this pullback, this most recent pullback. Doing so, looking at GLD volume, doesn't look that aggressive. It might look aggressive on the price, but that volume isn't matching the last couple pullbacks. So I think it might be petering out. That's my personal opinion. If you want to talk more about gold, you can always reach me by going to our main website, thecompleteinvestor.net. By the way, every page, all you have to do on my website is scroll down to the bottom. You can fill out a form for me to contact you, or just call the office. Office number's at the bottom as well. Free, no obligation conversation about, hey, how might gold fit in your personal portfolio, answer any questions you have. Not only do we do gold in your IRA, we also do direct delivery. By the way, nobody, in my opinion, delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days. You can also buy gold, physical precious metals. That's not tied to any information that's reportable. What does that mean? Yes, you can actually own coins that are deemed non-reportable, which means while you own them, you don't have to report to anybody that you have them. And me as a U.S. dealer, licensed dealer, we don't have to tell anybody that you bought them from us. So again, I think right now is obviously a very, you know, stressful times in overall all markets, let alone gold and silver. But I do think that there's some really good information that I shared about what's really happening behind the scenes. I do want to see what's going to happen with this IPO tomorrow. Does it fizzle, right? Does it flame out? And then does money come back into those more conservative investments like gold? Thank you so much. Talk to you soon.